We are back talking about banks, which have just announced first half 19 numbers. And we're just taking a view on an overview at Cooperative Bank. And what Robert likes about this bank is the growth in the non-funded income. Now, Robert, let's talk about KCB and Equity Bank. What did you like? What did you not like from these numbers?
I think to begin with, KCB, again, being a big bank, you look at the way they've positioned themselves. I would say that they are playing a strategy known as dual transformation.
Okay.
Yeah, because I believe that digital transformation is not enough.
All right.
Looking at the revenues that they're currently getting outside the branch. In 2018, KCB revenue outside the branch stood at 5.2 billion, and total revenues stood at around 89 billion. So if you look at the percentages, is still quite low, but definitely the number of transactions are going up, so it is something that they'll have to grow into the future. Okay,
so then the majority of transactions are actually outside of the bank, but then they are not as profitable as the transactions that are still happening inside the bank.
Yes, so that transition will take time, yeah.
Okay.
Yeah, so actually the sentiments on digital transformation, they're actually louder than what the digital transformation is being.
Now you're making me a bit sad. I'm always very excited about technology. That's the new way to go, bank on your phone. But what about lending? Because of late, what we've seen the banks do is leverage on the Safaricom platform, on the M-Pesa, and then begin to offer access to, you can withdraw your money, you can be able to make payments, etc. But I haven't seen them actively come out and say, now you can actually borrow, and we can actually facilitate proper lending outside of the likes of KCB, M-Pesa, and CBA M-Shwari. Do you see that as a trajectory that banks can now begin to have their own internal mobile lending platforms outside of what their dependence on Safaricom?
Yeah, actually that's a very interesting take, because I think Equity and Coop, they're able to do that, and they're doing quite well. Yeah.
Okay.
So for KCB, they have their own internal loan product for their customers known as Mobile Loan.
All right.
On top of that, they have KCB M-Pesa, and of course recently now they're also part of the partnership for Fuliza.
For Fuliza, okay.
Yes, and for the 6 months to June 30th of June 2019, KCB actually lent 103 billion on mobile in terms of disbursements. Yes, it was quite huge, yeah. So that's why I'm telling that they're able to maintain their traditional banking model and show their power muscle, like through acquisition of NBK.
Yes, that. In fact, do you have any comments on that? Is that a good thing for KCB shareholders? Are you neutral on it? Does it mean anything?
I think it is good in terms of consolidation.
Okay.
Yes, because it will actually grow their strength in terms of government affiliations and cheap deposits.
Okay.
Yeah, so overall in terms of the mobile loan products, KCB, they have the richest mobile loan products.
I like the way you light up when you talk about KCB. Is that your best pick?
No, for me I just like businesses, and when I see a business being able to do what businesses are supposed to do in terms of
making money for the shareholders.
Yes. Okay. So when you look at the KCB profile, on top of KCB M-Pesa, Mobile Loan, and Fuliza, they also have Mobigro, which is for farmers.
Okay.
Still small, but quite strategic, and is a very progressive way of thinking from the bank.
Okay.
Yeah. So they have that on Stawi Loan. So I think they have the richest product line for loans.
For loans, okay. Yes, and then they can actually leverage off their relationship with Safaricom and their existing client base to be able to drive additional mobile products.
Yes, they can. Okay. And just to mention, KCB M-Pesa is very good in terms of having the flexibility. If a customer borrows and they're still within their loan limit, then they can top up. Okay. Which you can't do with other products.
You can't do, okay. Yes. But then do you have a sense of the pricing of the revenue share between KCB and Safaricom? Because it can be, you could be pushing numbers as KCB, but then, as you said, it could not be earning you money today. It could just be a platform.
So the pricing is usually good at about 80% for KCB, then 20% for Safaricom.
Okay. All right, interesting. So maybe some good upside for KCB there. Let's switch over to Equity Bank. How are their half-year numbers looking?
Okay, Equity had very impressive interest income growth, which is actually a first in a few years from 2016. So again, when you look at non-funded interest, Equity is just up there, in terms of absolute income from like fees and commissions.
So again, so one of the key trends that you're seeing is coming out is really non-funded income, which is fees and commissions, was really the key driver for the results that we have seen.
Yes, for most banks.
For
actually.
most banks.
Yeah.
Okay.
Looking at Equity, Coop, and KCB.
Equity, Coop, and KCB. What about costs? Because we've dealt a lot on the top line. What is happening with the costs? Are they becoming more efficient? Are they spending more on personnel? What's happening? Because we have seen a lot of layoffs. At least some of the banks coming out and saying we will be laying off a certain number of employees on our payroll. What does that mean for cost and expenses going forward?
I think for KCB, they are very good at cost optimizations, and actually their bottom line in terms of cost went slightly down. Then for Equity, it was a single-digit growth. For Coop again, now they are doing a lot of investments to power the digital platform.
Okay.
Yeah,
Are they buying a new platform? Are they using the existing platform? How does that work?
They're just doing upgrades and implementing new technologies for the Soaring Eagle strategy.
Wow. Oh,
yeah.
wow.
So
like
actually forward thinking. Yeah. If you understand the banking sector,
yes,
you'll see that actually now this is the planting season.
Okay, this is the planting season.
Yes.
So if you want to harvest, whether it's next year or it's in 5 years or it's in 10 years, what banks would you be putting your money in today?
Okay, I would go first. If I have to look at dividends, I'll look at the two banks.
Okay.
Which are Barclays and Coop Bank.
All
and
right.
of course also you'd also want to look at Stanchart.
Okay.
Then for growth, KCB and Equity.
KCB and Equity.
Yeah.
So, but I need you to leave me here with one. What are you buying, Robert? What one bank are you going to put your money in? If at all you're going to put your money in the banking stocks.
If I were to look at value, I'd go for DTB Bank.
DTB. Oh, interesting.
Yes.
We haven't talked about DTB. Bring us up to speed on Diamond Trust Bank.
They haven't announced their half-year results yet, but I think...
Actually, I think they did. They didn't. There wasn't a lot in the press, but I think they probably came out. It was a very quiet publication in the local dailies.
Okay.
Yes.
Yeah. So, but basically, if you look at the price currently and the book value...
The price and book value, I like that.
Yes,
book
yes.
value.
I think the market has really mispriced the counter. Yeah.
Okay.
So
what are we missing? What is the
headroom.
market missing, do you think?
So I think maybe sentimentally or in terms of the activities, they're not as exciting as other banks.
Okay.
Yeah, so maybe they're doing a lot of stuff behind the scenes.
Okay.
Yes, but there's a lot of value in that bank.
There's a lot of value.
The book value and the current price in the market.
What price would you buy Diamond Trust Bank at?
Okay, currently we are talking about 113, anything
100.
below 120.
So 120 is the most that you would pay. So 113 to 120 Diamond Trust Bank. Okay, fine. So we've come to the end of the show, and I really appreciate you coming here and just giving us your views on the first half. Ladies and gentlemen, that was Mr. Robert Ochieng. He is an independent banking analyst. What he has told us is there's been some good traction in the banks. They're beginning to actually lend in terms of their loan growth. In the last half year, we've seen some banks do double-digit growth. But what I found very interesting was this: a Diamond Trust Bank, in terms of the price-to-book valuation, there is some upside there. He's certainly a buyer at between 113 to 120 shillings per share. Are you a buyer? Let us know. Thank you for joining us. Join us again tomorrow. And remember, we are always live streaming on our Metropole YouTube or Facebook page. Thank you and good afternoon.